You good? And we are live.
Awesome.
Yes. Okie dokie. So let me get the. Yep. 18. And we are live on our Real Talk with JT, episode number 3. And today, guys, I'm bringing you something really special. Someone who really he understands mortgages better than anyone else out there. And I
Oh
think
boy.
in today's market, I mean, in market in general, like mortgages are must. And in today's market, I think the knowledge, it's power. And the more we know about the mortgages, the better demonstration of competency and better connection we can have with the clients. And you know what? It's always about giving value to our consumers and clients. So, Preet, thank you so much for being here. I mean, you've been in the
Hey,
real
thanks, John.
estate, in mortgages all your life, right? It's been a while.
It's been more than 2 decades, I would say.
Wow.
More than
Well,
20 years.
you aging gracefully, I would say.
You know, if someone said that real estate is a full of stress, I would not agree with them. There's no stress in our industry, so that's a reason,
Yeah. I mean,
right?
look, a lot of it is perception, right? It's like how you see things either happening to you or it's happening for you. And just that little switch, it makes the whole difference.
Look, there's a whole lot of difference, right? I mean, especially in this day and age, we always running around. We always have something going on. We have a to-do list. We have calendar invites. It's just a matter of clicking and saying, "Hey, right now I'm working, and now I'm with my family. Here I'm working on my car, but I'm not thinking about my actual work." So it's fine tuning that minor difference. It actually adds a lot to your mental psyche, and then at least in my opinion.
Yeah, and I couldn't agree, more with you on that. I actually spoke with one of my coaching client calls, and
Yep.
time blocking or scheduling or just really prioritization, right? That's the key. You can take care of everything, you can be everywhere, but you can certainly choose, which spots and what person gives you the highest return on that time, right? Because time is the highest commodity we have.
Oh,
That's it.
absolutely,
You
absolutely.
don't
There's
get no
actually
more
a
of that,
theory.
right?
Yeah, absolutely. And there's a theory called appropriate engagement. Like when you're doing something, you literally focus on that. You're not thinking about anything else. I mean, we'll talk more about this. I have on my closing remarks, I have a special something for the audience on that.
Good, good.
I think they will enjoy it.
I love that. So, Pre, tell us a little bit about you. So I know you in mortgages, right? Residential mortgages. You don't do commercial, right?
I
A
don't do
little bit.
commercials. Yeah, I specialize in all type of residential mortgages. Like I said, started back in I think way before 2000, and it's funny how I actually stumbled upon real estate industry, and how quickly I fell in love with it when I actually started it. So yeah, it's been a while. I've gone through certain cycles of what real estate had to offer, and we started at the time when 1003 application was taken by paper. This is way before e-docs. This is way before e-signing, and
Fax, a lot of faxing, right? Probably.
it was a lot of faxing, a lot of dial tones and pulses to deal with. Um, and I've seen, to be honest, besides some struggles, I've seen a lot of changes happening in the market. In today's world, especially when there's a lot of social media, a lot of stuff going on, um, we're still evolving. I mean, we're still learning. I mean, I'm thrilled to say that every year we add something to our arsenal. We cannot say that, hey, we have learned everything and we know everything.
Yeah.
It just the way the market is changing, the way it's evolving. It's very important, actually. Doesn't matter you're in real estate, mortgages, or a car salesman. You gotta evolve. You gotta go with the times. I mean, if you want to, fine tune your skills and gain a market share, I think it's very important.
Yeah. And I think, many people they say, I don't want to evolve, I want to get better. But I think if you're not getting better, you're getting worse. And if you're getting
Yeah.
worse, you're gonna lose somewhere, something, somehow, sooner or later.
Oh, absolutely, absolutely. Listen, the time is going to keep going. The change is going to keep coming.
Yep.
If you're changing with the time, you're going to find yourself back in the line. But ideally, and I strongly tell every professional that I've worked with, I've dealt with, is keep up to date, stay with the market. Um, Not only necessarily you need to know about the pop culture, but learn about the technologies. Subscribe to
Big.
this technology magazine. Just stay up to date with everything that there is, even if it's not related directly to your profession as a realtor or as a mortgages, but it kind of give you a scope, a wider scope in life rather than a narrow scope that we tend to get very busy with.
Yeah. And
So
I think, pre with that, I really like about today's market that the playing field kind of level for all the agents, right? Because it
yeah,
doesn't matter no longer, like before used to have the agents 20, 30 years in the business, and because they had all the relationship with people, it was very hard for the new agents to kind of break into those relationships, right? But now, thanks to the technology, YouTube, video, social media, the new agents, like brand new agents in the market, they can really stand out, and they can really take market share, and many times they can actually compete with way bigger companies than themselves, right? So I love that
yeah.
about the technology, and I know you're gonna talk about it as well. So tell me again, you said you got into real estate by a coincidence. Tell me more about it.
Well, it's very, it's not funny, but I think back in 1996, mid 90s. So my background is commerce and software. So I was
Hmm.
trained as a computer programmer, and that's where my head was back in the day when I was in my 20s. And
Well, what
I
else? You're gonna
started,
be IT guy, either IT guy, lawyer, or doctor, right? Those were the
or
three
yeah,
options you had.
1-800 support. Yeah. um, I got into electronics business back in mid 90s, and simultaneously around mid 90s, my uncle, who's also my mentor not only about business but about life. I've learned so much from him, and that's what I absolutely, just going off track. If you can find anybody who's listening to it, if you can find a good mentor, have it. They help you throughout your life. It's they can gauge they can actually design your path. At times you feel lost. So anyway, he actually had started a bank in 1996, and at a casual interaction around 97, he said, "Hey, listen, what you up to?" Like, I'm like, "Hey, this is what I'm doing." I had multiple locations at that time. I was in electronics and technology, like I said. And he said, "Why don't you come and take a look at what I'm doing?" And a year before, I had actually closed an FHA mortgage, and I didn't pay attention. I'm like, "Okay, I'm going to a bank, I'm getting a mortgage, and that's pretty much it." So I like very vaguely asked myself, "What do you do?" He said, I sell mortgages. Remember, you just got one last year. I'm like, "Okay,
Did
so
you
you
get it
think I
from him
can
at
go
least?
sell?" Huh?
Did you
No,
get it from him?
no, it was through a realtor from one of the Remaxes,
Mm.
introduced us to a banker. But long story short, he invited me to come to the bank. I got there, and very instantly, right away, I fell in love with the whole process of it. The whole process of home ownership, whole process of mortgages, and coming from a background of computer science and programmer. What I figured is the day one, it's a very simple process, but most of the loan officers were making very overcomplicated for the clients, very overcomplicated. So as a nature, I like to simplify things. No matter what I look at, either it was a relationship or a business deal or anything, I personally simplify it. So that simplification sort of helped me get into the business very quickly. They attached me to one of the seasoned loan officers. And within a year, I don't know, the grace of whatever you can say, my production exceeded the person who actually I was attached with. And from there onwards, I say, you know what? I love this field. I love this. I love the interaction that I had with first time home buyers. I love that interaction having with real estate agents talking about their markets and different aspects of life. So it kind of took me from sitting in front of the screen guy into the street where I was meeting people. And John, if you remember, that's how we had met in 2000. So that
Yeah,
was a journey.
it's been a while.
That's It's been a while. That's how I started in mortgage industry, and since then, I've had an opportunity to work with the nation's top lenders, brokerage houses, big banks. So and we're still going. I think I'm still learning and I'm still sharpening my tools. And but it has been so far a very great journey, I would say.
Yeah, and I love how you said you still learning, right? I think the evolution part, the progress, the learning, just getting better. It never
Yep,
stops, right?
it's very exciting actually.
It is.
It's
Yeah.
very exciting at the
Especially, I
moment.
mean, these times, right, with a lot of uncertainty, I think
Yeah.
also a lot of good positive changes they come into play too.
Oh, absolutely, absolutely. And look, it's all about a growth mindset as well, right? I mean, it really depends what your goals are. And I speak with, so my business is entirely focused on real estate brokers and real estate agents, right? And I not only my relationship is referral back and forth, but also about growth. Hey, what part in your life you're lacking? We all have mental blocks. Some people have mental blocks of cold calling. Some people have mental blocks of
Mhm.
door knocking in real estate, right? At least pre-COVID, this was a usual practice. So when I sit with my
Mhm.
real estate professionals that I've been working with, and some of them are working with for more than 20 years, is hey, at what stage I can help you kind of take it to the next level. If you have a certain mental block, let's work it together. Let's figure out new techniques of marketing. Let's figure out new techniques of open house. Let's figure out new techniques of staying in touch with the home buyers. So we're always kind of
Mhm.
evolving. It's not just one off. It's every week, every day that you're out there. You're looking at and even from new agents. I have learned some from new young kids who's 22. I've learned some amazing things because obviously there's a generation gap. I'm not in my 20s, and I've been doing this for a long time. Even though we evolving, we're learning, but so some of the new agents that are coming up with certain ideas that I'm like, wow, I'm like they have that mindset to grow and take it to the next level. And
Yeah.
that's a difference, right?
Yeah, I
That's a
think it's
difference between.
changing faster and faster. Right.
Oh,
Yeah.
absolutely, absolutely, absolutely.
And I think, like
Yeah,
you said, end of the day, it's a game which you gotta play, right? And you just gotta look for ways. How can you get better? So I got a quick question for you. I think we can jump
good.
into the mortgages.
Yeah.
Typically, what is the pre-approval process?
Well, it's as simple as it sounds, right? The pre-approval process is, for example,
Hmm.
decluttering your closet. So you have a closet which has a lot of clutter, and you want to make more space in it. What do? You declutter. So again, in this very complicated process, our idea is to simplify this process. So in simple words, especially for the audience who are listening or who will listen in the future, the pre-approval process, if you started from the day one right, it sets you for a success in this path of home ownership, right? And majority of my agents, and I've always had a pet peeve with them, that they're working with buyers and they're not pre-approved. I'm like, why? Think about this. Every single minute that you spend with the unqualified buyer or you think is qualified, there's a big question mark. And if they're not
Yeah.
qualified, you're actually wasting money. Now you have to determine, even as a self-employed individuals, right? You are saying, hey, my hour, my minute is worth this much. This much I'm worth per hour. If I'm spending 1 hour with a client and my hour is worth $200, you just wasted 2 hours, which is $400. You just wasted. So what I generally do is when a client walks in, my pre-approval or our pre-approval is so detailed that we already have looked through their assets. So there are 5 or 6 different items that we look at. The very first item that any lender will look at is the credit report. Now, credit report gives us a tier. There are 3 bureaus that give a FICO score. Based on the FICO score, we determine the tier that they fit in. The second is the down payment. The down payment will determine what sort of mortgage are they going for. Are they looking for FHA or Sonny Mae or a conventional or a jumbo if it's above conforming loan amount? Third is their income. Are they W-2 employee or are they self-employed? Now, calculation between W-2 employee and self-employed is entirely different. And there's a huge misconception, and some of the lenders actually, or loan officers, would make a mistake where they actually only look at the gross income. They don't even look at the deductions of the schedules and the net income, and the whole calculation is completely off at times. And even on W-2 employees, what we need to look at is are they hourly? Are they base salaried? Do they have overtime? How long they have been receiving an overtime? So there are a lot of things that go in it. And the fourth item on the list is the assets. How much money are they willing to put down? How much money they have in the bank account? Are there any large deposits? Are they taking any gifts? So what we do is we basically gather all this data up front, pre-approval based on what they have. Now, chances are, if it's yes, wonderful, you have a pre-approval letter. Now you jump in a market with your realtor. And at least as a realtor, you're not wasting your time on somebody who's not qualified. The reason I always emphasize on pre-approval, and it has to be done properly. If your lender has not reviewed the assets, income, credit verification, and you're just holding on to a pre-approval letter, and that's a very good question to ask, actually. A very good question to ask your loan officer. Have you looked at their taxes? Have you looked at their W-2? Have you looked at their income? Have you looked at the taxes? If they said to all these questions, answer is yes, then you are good to go. So that's the first step, I would say. Any home buyer who's thinking about buying a property, even if you're thinking about buying a property next year or 6 months or 3 months, you start now. Because if you're, let's say, not approved, any good lender will be able to tell you, hey, listen, take these steps to make sure, save enough money, or you need to do this much on credit. You need to pay off your debt to bring your credit up. So there are certain paths, there are certain steps you can always create to kind of go through the process when you're ready and down the line.
So I wanna hear your take on this, right?
Yeah.
Because I know a lot of agents, they work with the buyers and they might get some pullback on the pre-approval, right? Hey,
Yeah.
are you pre-approved? Hey, don't worry about it. We got great income. Finance the house first,
Yeah.
and then we're gonna get the pre-approval. And I
Yeah.
feel like the agents, they almost afraid of, I wouldn't say,
Yeah.
pushing them into getting pre-approved, but
Yeah.
maybe asking a better questions and
Yeah.
going deeper, right, into
Yeah.
that conversation where they can really understand, like, what's going on here. Is it they
Yeah.
have to sell a property in Bangladesh, or is it they got to improve the credit?
Yeah.
Maybe the wife and husband, they're not on the same page, like maybe something going on over there. Like, what is your suggestion on that when they have the drunken monkey? It's like talking to them and holding them
Well,
back.
very, very good question. And John, I tell the buyers, I'm like, look, if you sit in a taxi and you tell the taxi, hey, just keep driving, I'll tell you when my destination will arrive, you're going to pay a huge bill. Unless you tell the taxi, hey, take me from Jackson Heights to Astoria, and then either you already paid via Uber these days, or the meter will run through there. But if he just, it's the same thing. If you tell a realtor, hey, I'll get it done later. You know what? The bill's going to be due when the time comes to sign a contract. And now you had this problem in credit, you had this problem in income, and you don't qualify for X loan amount, you only qualify for Y loan amount. And then all the time and the effort that you have put in has gone to waste.
Yeah. And you as the
So
agent, you the bad guy because you didn't do your job. You
you
didn't give
didn't do
me
your job.
pre-approved
Exactly.
first. Like, come on, you put
Exactly.
me in the situation and you supposed to know, not
Yeah.
me. You
Yeah.
supposed to know, you know?
Yeah. Yeah. No, exactly. And then the listing agent's going to not take you seriously next time. They're like, oh, hold on. You put an offer, but you haven't done your due diligence. So your job as a realtor starts when the buyer comes in. Look, if the buyer is adamant and they're like, I'm not gonna give you, I mean, it's really up to you. Do you want to spend your time on a useless cycle, or do you want to look? There's a fine difference between an activity and productivity. Some agents believe that they'll speak with 10 buyers it's an activity. At night, I can go home, watch Netflix, drink a beer. Great, I had a great day. But how much you made? Zero. Or you want to really focus on productivity, even if it's a one or two agents, but at least you were productive, which means once you have a contract, you have money in the bank.
Yeah. Yeah, Josh actually he made a really
Yep.
good point. Thank you, Josh, for making a comment. Schedule a buyer, consultation appointment, and show them why is it important to have the pre-approval,
Yep.
before looking at the home. And I
Yep.
always, Preet, I always try to put myself in their shoe, right, and start thinking like, hey, listen, if I'm ready to go
Yep.
and I need to be in a house in 30 days, like, what could be holding me back from not getting the pre-approval, right? Because if you really
Right.
want to buy and you need to be in the house in 3 months, that means we
Right.
got to go on the contract like within the next 2 weeks.
So it's a coaching.
Yeah, that's exactly
It's a
what it
coaching.
is, right? So
It's
I
coaching.
think meeting with a buyer the very, very first time, not just taking them out, like
Yeah.
let's meet them, let's sit down, right? Let's go over the process. Let's set the expectation so the buyer now they know what's gonna happen and what they can expect from you, what they can expect, from Preet as the banker, what they can expect from their attorney, so they know what they get himself into, and we can kind of like clear the fear of the unknown. Because I think, Preet, many times it's just not knowing and not having the right information, right? So for us as the
Exactly.
professionals, it's really,
Mhm.
giving them the right information in the right setting and in the right format so they can really digest it and understand it, right?
Yeah, yeah, yeah. No, no, you said it right. It's all about setting expectations. So if a client walks through your door and said, John, I'm looking for a house. Now they're trusting you, but then you as a professional has a responsibility as well.
Yeah.
You say it's fine. Hey, these are the steps we need to take. Look, if you go walk into a DMV and just say, hey, give me a license. I've not passed the road test. I've not passed the written test. What they're gonna say? Go.
Take those
Take the
steps.
written test, pass the
Yep.
road test. They get the license. The same thing. Hey, you want to keys to your new home. These are the steps we're gonna take to have that successful transaction. It's gonna save you time. You're not gonna lose good opportunities, because I have seen many buyers losing opportunities because they were not pre-approved.
Because of
And
the
then
agent, yeah.
Saturday morning, they're calling me. They say, hey, Preet, I need a pre-approval. And by the time I give them a pre-approval, Friday night or night before, someone has already put an offer and their offer had been accepted already while they're getting the pre-approval done.
Yeah. Yeah, I mean, you need the approval to play, right? If you don't have
Exactly.
the access,
Exactly.
how can you go in?
It's
It
sometimes
doesn't
if a
cost them anything, right?
pre-approval,
It doesn't
it doesn't
cost you
cost them
anything.
anything.
Yeah.
It doesn't cost them anything. It prepares them for success, or at least it prepares them to take certain steps down the line. And they can say, you know what? Wonderful. I'm not approved now, but a lender told me, hey, I'm going to take these steps. I'll be ready in 3 to 6 months. And you, John, said, you know what, John, Mr. Buyer, fantastic. You go ahead, take these steps. Let's stay in touch. After 3 months, we'll reassess it again. And again, it's their home ownership journey. and you're coaching them. You're a coach.
Yeah, and we know what, Preet, I think it also comes from our expectations agents, right? Because when we get someone on the phone or in the car,
Yeah,
we want to eat now, right? Like we hungry, we want you to buy like tomorrow. But what it does, it creates a really awkward situation for the buyers because they
yeah,
can smell the expectations like, oh my God, he's trying to close me now, but we don't even have the money ready. Now he's asking for pre-approval, like,
yeah,
what I gotta say, hey, we got it, don't worry, right?
yeah,
Because
yeah,
there is a disconnect somewhere.
yeah,
So I think, taking the pressure off of the buyer like early on and be like, hey, listen, if you want to buy, today or you want to buy in the next 100 years, like I still gonna be around. I still want to be the realtor because I like you and I care about you. Like if you make that connection, like a personal connection with them,
yeah,
and they will stick around with you for a long time, right? And I think what you will discover that the people are gonna say, hey, we're not ready now, but we'll be ready in 6 months.
yeah,
Hey, great news, you're gonna be in the business in 6 months. I think you will. That's a 6 months down the business, right? And
yeah,
what happens when you start doing things for them
yeah,
without really them being ready to go now, you would
yeah.
create a loyalty from the customer, right? So
Oh,
once they
absolutely.
get to the point, they're like, we
Yeah,
got the realtor ready. I mean, it's John is the realtor and Pre is the banker because when we were not even ready to go, they still give us the time. They give us the guidance and tools. So right now we are
yeah,
ready because of them, and we owe them the business. You know.
exactly,
So I
exactly.
think we got to earn the business before asking for it too. That's big.
No, no, absolutely. And listen, it's your business at the end of the day, right?
Yeah.
Now you as a realtor gotta decide, am I gonna be a transactional realtor who just do one off, move on to the second, or I want to build my source so big, so large, and huge funnel that I'm not a transactional, but I'm actually a service provider. I'm a value add to these homeowners that I'm talking to. Not just took care of Mr. Jones one time and that's pretty much it. No, but most of the lenders, real loan officers or realtors don't understand that your relationship with the buyer actually starts after the closing. So now, if you have done a good job, they have become your raving fans, my friend. Now you have these loudspeakers saying your name all the time. Hey, best realtor, John, 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 right? They're talking to their friends, family, neighbor. Who got you the house? John. So, in order to achieve that success rate, it's got to start from the first step. So, it's your business. You have to decide whether you want to be just a transactional or you want to build a business that can actually you can add value. You can add value to the community. You can add value to your you know homeowners that you're dealing with.
There's a really a powerful saying, by someone I can't recall the name now. He said, "You help enough people get what they want, you can have everything you want."
Yeah,
Right? Because I think when you help someone, it creates like a bound. I wouldn't say they owe you, but it kind of feels like that, right? Like if you do something good for someone, you're like,
yeah,
Peter's a great guy. Like I gotta get him a deal now, because like
yeah.
he helped me out with this. Now I feel kind of obliged to repay back the good deed. You know?
It's a value add. It's a value add. I mean, if I have
Yeah.
since I started in the business, I'm serving a second generation of those home buyers, kids who were 5, 6, 7 years old at that time. It tells you that you added a value to their life.
Yeah.
So I feel sometimes awesome that this kid, when they closed in 1999, they closed on the property. This kid was 5 years old, and now he's 27, 29, buying his first property. And his dad said, "Call Preet," and he's calling me and say, "You remember me? My dad's name?" And of course, I remember everybody because everybody's in my database since day one. I'm
And
his
you
son.
taking notes, and you
Can
taking
you?
notes, and are you as bankers use database too? I think
Huge.
I thought it's just a realtor's thing. You know what I
No,
mean?
of course. Listen. Everything around us is a data anyway, right? Everything is a data.
Yeah.
So the point I was making is every step that you take, the very first step you take has to be in a direction where you really want to go. And most of the time, we as individuals sometimes can't figure out what direction we're going to. So it's very, very important to first determine whether it's a business, life, getting married, having kids. These are the direction. And once you take the
Yeah.
direction, you got to be fully engaged. If you're not fully engaged, like for example, if you start driving from here to New York City and you're not fully engaged where you're going, you'll be like hanging out somewhere in Bronx or
I
in
got I
Brooklyn. And
got
you're
te-
like,
I
why
got
I'm not getting to
Tesla.
Manhattan?
I got Tesla, bro. I have the autopilot now. I can just put it on
Well,
and
that's a
forget about it,
cheating. That's a cheating, John. That's a cheating. But listen, absolutely, just like anything else, everything needs a direction in life. So,
I agree with that. Something I observed though, I think it's a lack of patience, right? Because even though you know the direction,
yep,
like I give you an example, right? Agents come to me and say, "Hey, listen, I want to sell 50 homes this year." Great. Where you gonna get a business from? Okay, I'm gonna do YouTube, experts, a little bit of that, a little bit of that. All right. They start working on it. A couple
yep,
weeks later, they're like, "Hey, I've been trying this, but he ain't working. Like I think I got to do something else. This
yep,
is not just me. It's not meant for me, but you just haven't spent enough time in it, right? You didn't take those steps you have to take to start getting that momentum. And I feel like, yeah, the direction can be correct, but
yep.
because and a lot of also today's generations, they like it easy, right? Because everything seems easy today. You see these guys on YouTube, like millionaires, billionaires. They shoot few videos. It's like overnight thing, and everybody thinks that the success you desire, it can come instantly, right? But they don't realize that it takes time. It
Yep.
takes time to build anything, right?
Oh,
Especially if you
absolutely.
really
Yep.
develop certain skills.
Yep.
That's a lifetime commitment.
Right.
But with that said, Preet, what are some of the main misconceptions borrowers and agents they will have about the mortgage process? What do you see in the field?
You know, there are many of them, right? There are many of them in this idea of misconception. I can literally unpack a lot of them, but there are three or four that are very very I come across almost every day. The first is the closing cost. So buyer called me and he said, "What's your closing cost?" We gave all the detail of closing costs. They call an ABC banker. ABC banker said little either less than or higher than, and now they're like questioning that I'm going to this guy because he's a lower closing cost. So let's divide a closing cost into three or four sections, right? So every lender has origination charges. Origination could be points that you're
Mhm.
giving towards the rate, right? Either you're taking a 0 point loan or a 1 point loan or a 2 point loan, depending on how low of rate you're looking for. Second is
So
their
mortgage, that's a
application fee,
mortgage buy down. You're buying the points to buy down
the
your
points,
rate,
right? Those are
basically,
those
right?
considered
Okay.
the origination charges in Section 801 on the loan estimate.
Okay.
Then you have the underwriting application processing fee. Those are fixed, almost every lender charges, right? The second is, which is the biggest chunk of your mortgage, a closing cost, is called title fee. Now, title fee includes all your municipal judgments, searches, mortgage taxes. Now, luckily, it's a standard fee. Taxes are the same. I cannot charge higher taxes, and John, you as a lender cannot charge lower taxes. It's pretty standard. The title fee is based on a certain title schedule. That's also accurate. So now, if you compare A lender estimate and a B lender estimate, if mine is slightly higher and the other one's slightly lower, there's something missing. And that's what I tell buyers. I said, just look around and see what's missing. Because these are your fixed charges. The title is pretty fixed. And in New York, buyer attorney is the one who gives the final bill to us. In our system, we estimate it. A lender estimates the title charges, but the final bill comes from
Mhm.
the buyer's attorney. And now if the buyer attorney tell me $10, I'll put $10. I disclose you $1,000, whatever the case is, right? If he gives you $20,
And I mean,
I'll charge you $20.
and and I think the title doesn't really has nothing to do with the bank, right? Because
No,
the
no,
title it's ordered by their attorney, and they order it from whoever they working with,
exactly,
right?
exactly,
So sometimes you could,
that's the
yeah, you could
biggest,
get,
yeah,
that's the biggest expense, I think, on the closing cost too, is the
biggest
title
expense.
search and
Yeah,
the
yeah.
title
If you look at the
insurance,
expense
right?
line item, that's the biggest expense, right? And the fourth section is your escrow, or the third section is your escrow. And now escrow is if you want to maintain an escrow. So your monthly payment includes your principal and interest, taxes, if you have a mortgage insurance, or your property insurance. And those three items or two
Mhm.
items are called escrow. Now, it's up to you, or depending on how much down payment are you putting. Do you want an escrow, or you don't want an escrow? If you don't want an escrow, the bank won't collect upfront taxes, upfront insurance from you. Okay? But 99% of the time, just for the convenience sake, borrowers say, you know what, I want one payment. So I want escrow. Let the bank take 4 months of taxes, 4 months of insurance, depending on what time during that month or a quarter they're closing, and how
Mhm.
much taxes they have to give upfront to the town. The escrow will be collected accordingly. So those are also calculated before closing. So technically, this is one of the biggest misconceptions when, and I tell the buyers, I say, if somebody is literally giving you a very, very low closing cost versus I have told you, or another lender has told you, there is something that is missing, which either they're not disclosing or you're not understanding it properly.
Yeah.
The
Also,
second,
also
sec,
have a
yeah,
also I have a quick questions on the escrow, right? So it's interesting. I didn't know that you have the option to say that you don't want the bank to hold an escrow,
yeah, you have. If you're putting
right?
down twenty
Because I
percent or
know
fifteen
if you
percent, you
don't
can
pay the
waive it.
taxes, oh, you can waive it. Okay, that's cool.
Yeah, yeah, you can absolutely waive escrow on certain programs depending on the down payment, and it's buyer's responsibility. Absolutely, buyer's responsibility to pay. But
Okay,
again,
that's it. That's interesting.
99.99%
It's
home buyers want that convenience.
yeah,
Uh,
yeah. I
the,
mean,
the
for
second
sure. And you
misconception.
want, and you also want to have, I think, not just the convenience, but you as a buyer and the bank, you want to be protected, right? Because in case if you forget to pay the bill and they put a lien on the house, they can take over the house because you didn't pay the taxes, right?
Yeah, I mean, if the lien continue to linger on, it could cause certain inconvenience. Yes.
Yeah, for sure.
Yeah.
Now,
Yeah.
also a quick question. Sometimes the banks, and that could be a difference, right? Like if the buyer
Sure.
gets a two estimates on the closing cost, let's say, and one of them say, 25,000 and one of them is 20. I'm like, hey, listen, this is 20, hon. It's, pretty is cheaper. Let's go with that, right? But then you find out that, this bank actually charges only 2 months of escrow, right? And this bank is holding 6 months of escrow. So it's like a 4 months. It's basically your money sitting down, ready to be
Yeah.
paid out, right, for the
Yeah.
taxes and the insurance and
Yeah.
other things.
Yeah. Yeah.
So how does
Escrow
the
is
bank
not,
determine if it's two or
well,
six or?
again, it's a basic calculator. It depends on what time of the quarter you're closing the loan. So let's say if you're closing, rough example, if you're closing December and the next quarter is due, they will collect 3 months plus 3 months. If you're closing in February, they'll collect less because the next quarter is 3 months and these are 2 months. So it all depends when you're closing. It's all calculated by the title
Mm-hmm.
insurance, and this is not
Mm-hmm.
it's not what bank determines. And yes, there's some determination to it, but title bill basically clarifies that how much advance that going to the county and how much they're going to hold. So between 3 and 4 is what's holded by the lenders most of the time.
We got then a
How do you
question
go?
here. How do you calculate closing costs for co-ops and condos?
Okay, so very good question, Josh.
Good question.
Co-ops, co-ops are not to a regular closing cost that we normally see on condos or on single family. Single family and condos are pretty much the same. The same sections on loan estimate applies. It has escrow, it has taxes, it's title. Co-op, on the other hand, does not have a title. It has UCC1 recording. So generally, the co-ops are less expensive versus a condo, but the major difference is you don't have the escrow and you don't have the title bill.
What about the mortgage tax? Do you pay a mortgage tax on a co-op and condo, or a co-op specifically?
Only on condos, because condos are treated as a single family. On a co-ops, there is no mortgage tax. So there's no
Yeah,
title and there's no mortgage tax there. Yeah, there's only
and
UCC1
no
recording.
transfer tax. Yeah,
Oh,
and I believe
transfer
no
tax
transfer
is,
tax when you're selling.
it's called a flip tax. It depends if, contract would normally
I see.
state that if buyer is responsible for paying a flip tax or it's a seller.
Mm-hmm.
It's
Yeah,
determined
and
by
that
their contract or bylaws. Yeah.
yeah, yeah, and I mean a lot of the co-ops actually in Queens, thanks God, they don't have flip tax. Which could be
Yeah,
a lot of
I've
money.
seen it very
There,
rarely.
there's one co-op. Yeah. So I mean, there's one co-op,
Yep.
specifically in Jackson Hines. Their flip tax, Preet, it's 25% of the profits. So
Profits.
I saw the
Wow.
unit. There was an older couple living there for quite some time, and
Boy.
when they sold, they pay over $100,000 in flip tax. It was
Wow. How much was
extremely
the
painful
co-op?
experience for them.
I can feel the
It was a
pain.
co-op, yeah.
Even I can feel the pain. Wow,
Yeah.
that's crazy.
Yeah, I mean it was. Yeah, I mean they make good profit. Don't take me wrong, but they lived there like 25 years too.
Yeah.
A long time. So another question I have over here, Preet, it
Yep.
says, and this is a good one. I like this one because I think, especially in today's market, right? Because of the rates they go up, and you probably experience this all the time where buyers they
Yep.
shopping around for the
Yep.
rates.
Yep.
And I know there's a lot of misconception, with that. But typically, how does the interest rates get determined?
And that's again a very, very good question. And again, stepping back to a pre-approval process, when we run a credit, when we look at the down payment, when we look at the program that they are shooting or targeting for or they're qualified for, now we know where to focus, right? But again, there are overall in an application, there are 20, 30 different factors that any lender look at it. And sometimes there's always a buyer has a question. Hey, look, I was on your website, the rate was 5.5%, but why you're giving me 5.875%? Now, Fannie Mae has a section on the credit score. So basic idea is FICO score is used. I'm so sorry. Somehow my call started ringing here. Sorry. Um, Lenders will look at FICO score, down payment, the program type, the county, type of property, whether it's a single family, two family, three family. So there are a lot of factors that go in there. And majority of the time, when you look at the teaser rate or the rate that's published online, most of the people don't read the fine print at the bottom. It says 745 a
Mm.
score, 20% down, max loan amount this. But when we collect all this data and we say, hey, your score is 710 and now you're below 740, so there's an adjustment. And this is a public information, actually. Any
Mhm.
buyer can go on Google and they can Google Fannie Mae adjustments and they can see, hey, why John gave me 5 and Preet is giving me 5.5%? Because John may not have checked your credit, or Preet has checked the credit and your credit score is 680. Now all of a sudden there's an adjustment added to it. So there are certain adjustment that goes in and that determines the basic rate. And again, this all is clarified with the buyers right at the beginning, right off the gate. Hey, what your scores are, and And even if sometimes they have a higher credit cards, the idea is, hey, try to pay them off, try to minimize your debt. Hopefully, by the time you find a property, by the time you get into hopefully it'll improve your credit, because credit report is good for 3 months, right? 100 and about 90 days. So after 90 days, we can pull a new credit report by law, right? So if within 90 days you're able to lower your debt, pay off credit cards, hopefully your score will go up. And instead of now at 680, you might be at 720. That will improve your rate slightly higher. So again, there are a lot of factors that go in. And that's something we always have a conversation with the buyers right at the gate when we start a pre-approval process.
Yeah, and I think, what would you say, from all the people you meet, right, on daily
Yeah,
basis, how
yeah.
many, like, what percentage of those meetings are the ones where you just basically guiding and helping the people to just get ready, right? They might not
Yep.
be ready to pull the trigger now, but
Yep.
yeah, you giving them those pointers, you giving them, the guidance, right? Like, how many of those, let's say if you meet 10 a day, would you say that half of them are not really ready? Are you helping them to get ready?
It's a good data point. I don't have exact data, but yeah, there are conversations we have throughout the week, throughout the month, throughout the quarter with people that were actually just thinking about buying a property. And they're saying, hey, listen, we're thinking about it, what we need to do,
Yeah. No,
right? I don't
good
have
stuff,
exact
man.
data point on that, but yeah, there are majority of the people. I have good amount of people that have been working since last year or year before, or even
Mhm.
during COVID. Some of them had unfortunately had a loss of income. Now they're going back to on track. The income is going up. The family members are all working. They have been able to save up some money, and now they're saying, "Hey, we are ready. A release is ending in June. We are ready to start working, you know, February, March onwards to find a property and close before we would have to renew a new lease." So
Hint.
absolutely, there's a dialogue.
Yeah. Hint, hint. Everybody. I mean, we should be reaching out to everyone 2 to 3 years ago. They were looking to buy, right? And they didn't buy. Like, we should be speaking to the people now.
Absolutely, absolutely. I mean, look, you are selling a
This is so
product.
good. We got a question. We got a question over here from Janita Moore. Are there rules and regs around lender credits or its company policy?
Lender credits. Well, it depends. There are certain. I mean, what sort of lender credits are we talking about? I mean, there are certain lender credits that big banks sometimes they have, special that they offer certain lender credits. Um, and
If you can
sometime if
specify, Janita, let us know.
yeah,
Exactly
yeah,
what you
Julia, if you
mean
can specify what kind
specifically.
of lender credits you meant, that would be helpful. And um, and sometimes lender credit is given if your closing cost went above the threshold that's approved by New York State, right? So, for example, if some sort of calculation was way above the threshold, lender will add a credit. But if it's something specific, then yeah, I'll be able to answer. But there are some companies do run special promotions, like big banks like Citi or BOA. Sometimes they run the policy. They have credits that if you're taking a mortgage, will give you 1/8 off or 250 off. That's their internal promotions.
Then we got a question from Josh. I don't want to get the pre-approved. My credit will go down. Yeah, that's a big one, right? Like, you get this one
If
all the time
you
from
if
people.
you don't get pre-approved, you will lose opportunity. So it's as good as not even having a credit, because if you find a decent house that you really want to get in and you like the location, you like the price, everything is good to go, you will lose that opportunity. And again, FTC, Federal Trade Commission, had came up with a rule many years ago that you, as a homeowner, and they understand. John, you're ready to buy a house. You're not going
Hmm.
to just talk to one lender. You're going to talk to Chase. You're going to talk to your own
Yeah.
lender. You're going to talk to your uncle's lender. You're going to talk to your aunt's lender. You're going to talk to everybody, and they're going to pull the credit. So if you pull a
Hmm.
credit within the first 21 days, it doesn't affect your FICO score if the credit is run by a lender, right? But if you continue doing it, let's say if a buyer, and this is a question that buyers ask all the time. Hey, if you pull a credit, do you think my credit score will go down? I have no idea because I don't know what your habits has been. Have you been making your payments in timely manner? What sort of debt are you carrying? Maybe you applying for a car loan next week. Maybe you applied for a furniture. Maybe you just ran another store credit last night. I don't know these factors. But yes, once you pull a credit through a lender, it's considered a hard inquiry. But I think they allow you 20, 21 days to go to multiple lenders and it won't affect your credit score.
So 21 days, about 3 weeks. You within that period of time, if you
we can
pull credit,
revisit
let's say,
this.
3 times, they
Yeah,
look at it as just one time, right?
yeah. I mean, we can revisit this policy if
Okay.
it's not changed, but I don't think so. It's not in my understanding that that policy has changed at all. But again, if the buyer says, "Hey, I don't want to get a pre-approved because my credit will go down," it's the same as just losing every opportunity because you didn't have a pre-approval and you couldn't put an offer on the property. That's actually going to cost them more versus running a credit today and losing 5 points.
I love it, man. I mean, that makes sense, right? If you really want to buy, you got to take those steps. So, meet the people first, go with the expectation and the steps so you can educate them and they can know what they're getting themselves into. And you know what? If you do that, everything is going to get a lot easier. Now, Josh is also asking, can you use the same credit report to a different bank? That's a good question, too.
Um, Not necessarily, because every lender pulls their own credit. So most of the time, I mean, we don't take anybody else's credit because we have to pull our own credit. Because when we pull a credit, it's attached with our system and it sort of import into our system. So we cannot use any other lender's credit at all because it's their name on it. It's not our report. So I would the majority of the lenders don't use it.
I see. Yeah. Yeah, I remember back in the days, the lenders the lenders they didn't want to give you the credit because if they give you the credit, you get pre-approved
Yeah,
with
yeah.
Peter and
Because
he
it
give you
was
the
fact.
report. Now you take the report and you shop around,
Yeah.
it was facts before, right? So it was the paper was the way to go. But it's we got 8 minutes to go. So guys, if you find this helpful, just let us know. Hey, this is freaking fantastic. Bring Preet back on and give us some questions if you have questions. Now, Preet, what do you think with the technology? And if I can be blunt with you, I know,
Yeah.
you bankers, I think you've been relying on us as agents to sort of like, you know, feed you the business for a long time. And I feel like a lot of you guys, you kind of, get left behind in terms of the marketing and branding and really, you're putting yourself out, right? Now I also have to say that what I've seen for the past 2 to 3 years, a
Yeah.
lot of you guys, mortgage bankers, you're really stepping it up. Like you really investing heavy into the technology and specifically like the TC, the transaction, being able to communicate and
Yeah.
really keeping the client, up to
Yeah.
date. And also, I know you
Yeah.
guys really co-marketing with a lot of agents just to make
Yeah.
sure that the agents they have the tools and technology and
Yeah.
everything to promote themselves as well. So what
Yeah.
are some of the trends which you see right now, which it's going to be a big deal in the next 12 to 24 months?
John, this is like my favorite question ever, right? So, like you said, technology is a huge part now, how we market and how we get the business. So we have, and I'm feeling like goosebump while
Yeah.
talking about it. We have a beautiful platform. It's called Agent Advantage. What it does, it allows me to co-market with my agents. So, for example, let's say you have a listing at 123 Main Street, and we are connected with the system. My team can produce
Hmm.
ton of marketing collateral, a single page websites for social media, one pager, open house registrations. We can do so much market to market the listing, and it just certainly allows. So the whole system is also allows you to watch the milestones. For example, you had a listing in 123 Main Street. Mr. Buyer came in, put an offer. Now we put the contract in. Boom, within the system in the CRM, the milestone started. It tells you when Mr. Buyer was qualified, contracts in, appraisals in. So now, even though I call my agents all the time about the updates, but now you have another tool that you log in and you say what Preet has been doing last night on the loan, right? What Preet's team has been doing on the loan last night. Now it's in underwriting. Now it's going into processing or closing. So you have actually ability to see the milestones, and this is how the technology is going to keep evolving, right? Either through app or either through our laptops, you log into certain systems and you watch. And that's what I tell all the agents, like stay abreast of this, like stay ahead of this, learn, don't be shy. I have personally helped many agents start their Instagram pages, Facebook pages, because they never had it. I'm like, hey, you cannot not have this. It's a free tool. You better use it. You don't know how to? Let me show you. I'll spend 20, 30 minutes with you and I'll show you, or my team will show you how to run a Facebook page or Instagram page or whatsoever. Right. And look, I was also a victim of that. I didn't got into social media for business purposes. I started doing it only a couple of years
Oh,
ago.
different purposes.
Personal purposes. I was mostly showcasing my hobbies, right? So,
Yeah.
but again, doesn't matter. It's just all about showing your personality. Look, we all come business aside. We all have certain strengths and certain weaknesses. So what I and my focus is when I meet somebody and we say, okay, you know what, let's collaborate, let's do business together. It's all about energizing each other, all about you know,
Mm-hmm.
amplifying each other's success and saying, okay, let's grow it together, let's go to the next level. And I always tell agents, you have any mental block, hey, call me. I might not be expert at it, but I can show you a way. I can tell, hey, call John.
I'll be
John is
calling
pretty good
you.
with social media.
Since you mention it, I'll be calling you every night now.
You can absolutely call me anytime. So it's a different type of a collaboration, right? Back in the day, it was Mr. Banker. Yeah, we both rely on each other, right? If you don't have a good lender, if I don't have real estate source, we are complementing. It's like a marriage, right? And realtors, listen, I salute you guys. You guys spend so much time with buyers, showing them properties on the weekends. Like I literally call some agents. They're like, "Where are you?" I'm showing open houses. I'm like, oh, I feel bad. Like I'm like just sitting in my office, and you guys in the out in the rain,
And
under the sun, under the
you in
snow.
Vermont snowboarding, having fun with the boys, and they're just like,
See,
yeah, I'm working on the offer now. Gonna be submitting it in.
oh, by the way, I have spoken with the buyer while I was skiing down one day. Don't worry about the
Nice.
noise. Talk to me because I'm always plugged in. And so it doesn't matter. You feed us a business. We need you. You need us. It's a collaborative, right? And this is the best way to grow. And this is what people don't understand. They change their loyalties sometimes very quickly. But again, find a good person that you're really connected with and grow together. Watch how it's going to work because again, not nothing against realtors, but some people move here and there. It's fine. Sometimes you cannot commit, but once you
Yeah.
commit into a relationship and you know the person, you know their experience, you know their history, watch how your business will grow. Because together, it's unity is a strength,
And I
like to
think
say.
Preet also, yeah, and I think it also, for the agents and the bankers or any profession, I think in any relationship you go into, just being clear on, what are your goals, what's your expectation from this relationship, how you want this to play out, and really how it could be a win-win for both parties, right? Because
Yeah,
if it's not a
absolutely.
win-win for both parties, it's never gonna work. And you gotta have certain standards. I think there's a lack of standards today. I think just trying things and see if that works, that's not gonna work, right? It's about there's a lot of proven strategies which we know you've been using, we've been using for years, and it's just working. right? So
Oh,
end of the day,
absolutely.
you got to know what
Yeah.
you want, how to get it, and like you said, partner up with the right people because that makes the whole difference. Now,
Yeah, whoever it is. Absolutely.
what's your prediction for the mortgage rates and for the market this year or next year?
Well, if I hit it right on the nail, I will make so much money just shorting certain stocks. But I'm not that expert. But I think what's happening is the Fed will slowly continue to raise rates, but market will adjust. I think wildly prediction
Hmm.
is that by second quarter of this year, rates should slightly get better. But again, we'll see. It's just the beginning of a new year. A lot of new reports are coming out, and inflation, as it's not growing rapidly, but it's on a plateau, hopefully. And and I think after second quarter, I think we will see some positivity in the market.
Yeah. So my question is, do you feel like we on the way out, or you feel like because there's two opinions, right? One opinion is, hey,
Yep,
listen, we passed the storm and we
yep,
coming out of it, right?
yep,
And the second one is, no, it was just the baby. The daddy and mom, they still coming. You know what I mean? So
yeah.
buckle up. Because we still gonna be for a quite some ride. So you feel like we already passed the worst, or you feel like this is just the beginning,
I
and
think
we're gonna see
that's a
exactly how
very
it's gonna play out.
that's a good question, but it's very tough to answer. There's a lot of technical terms that or items that go into this process. By just saying what I think would basically diminish the whole idea of where we are. I mean, there are a lot of factors in play at the
Hmm.
moment, like recession, inflation, the Fed rate. Like, we got to literally monitor it. But my only advice, and I'm also, as I'm saying it, I'm telling myself as well, the best thing we can do, because we cannot control this anyway, right? We cannot control the rates, we cannot control the Fed, we cannot control other factors that are out of our control.
Hmm.
What, as a professional, we can control is how well we spend time marketing, gaining market share, because this is the time when there are a bunch of people going to feel so depressed, unfortunately. But here, some of us or some of you will take that torch and run across the line as fast as possible and gain the market share. This is the time to think on a grassroots level, grow your business, grow your funnel, you know, connect with good people, attend as many networking events you can now. Post COVID, I think everything is pretty much open now, right? People are doing networking events. I myself been attending now at least 2, 3 events every month, and I'm hoping to do at least 1 or 2 every week. Uh, just go down to the roots, go down to the basics. Don't give up. Business will get better. Certain things we control, certain we don't, and we focus on things we control,
We
and
got
that's
one more.
our activity.
Yeah, pre.
Yeah.
Yeah, I agree with you. I mean, there's just so much, which is going on the outside, right? And you
Yep.
can you can control most of it, but you can always control how you perceive it and what you
Exactly.
do about it. So I
Yep.
love this saying. They say the real estate market is between your ears, right? For us as realtors, and that is
Yep.
so true because in this market. You
Yep.
either grow and take over market share and you grind and you go all in, or you will
Yep.
sit back for it to pass by, and you
Yep.
will lose relationships. Janita has a good question over here. She said,
Yep.
buyer wants to compete with a new construction lender, but there's incentives to make them go with them.
This is for the new construction loans.
New constructions, yeah. So usually the builders, they will be giving like certain credits to go with this lender.
Builders. I'm sorry.
Builders.
Repeat the question, John. What do you
Builders,
say?
yeah,
Yeah.
builders. Many times, builders, they work with lenders on the new constructions, and they give them certain credits and benefits if they're gonna go with a
Yeah.
certain lender.
Yeah. 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 That's some of the lenders have or builders made that, and their internal policy that there will be certain discounts. But again, depends on what marketplace you're in. I have not done any new construction business where my market is in a long time. Not to say we don't have products, but yeah, I've seen that they offer. And look, if it's working out for a client, then why not?
Yeah,
Like,
it's
why to
gotta
go
make
to go
sense.
to a yeah, and some lenders do have sort of affinity programs where they say, hey, listen, if you work with you, and we'll give X amount of discount to your buyers, like especially
Yeah.
on a 30, 40 units in a building or a new construction, they're
Hmm.
building 20, 30 homes, and then the bank goes in as a sole, but in exchange they create certain affinity programs where they offer certain discounts. So, well, absolutely, I mean,
Hmm.
and there are certain advantages and disadvantages, because now you still compare with another lender, but there are certain advantages are that they know the project, they already know the plans, they already know all the nuances that
Hmm.
is a part of that construction,
Yeah.
right? So if John the builder has ABC lender, and this lender has actually reviewed the project and they've offered certain incentives, and sometimes it's good for a buyer. It saves time as well, rather than
Yeah.
you going to a third lender who has no idea about the project. Now you're fumbling with the paperwork. So it really one off. I mean, it depends,
Mm.
and comparison is absolutely a must. That I would say absolutely compare what their lenders offering or other lenders, and risk can be worked out. The other logistics are easy to work on.
Beautiful. So I know we went a little bit over. I hope it's okay, Pri. I know your schedule is
I'm
super
fine.
busy, but I really appreciate you guys. If you find it helpful, give us some thumbs up. If you like this, comment, share, subscribe, like, give us some love, give us some peace, because you know what? It helps the algorithm, right? The more you like it, the more you comment, the more people are going to be able to see it. But Preet, I appreciate you.
Oh,
Thank
thank you,
you.
John.
Thank you so
It's
much.
been thrilling to be on your show. Thank you so much.
And if you guys not watching this live and you're watching the recording, post your comments. We'll be going back and replying to all the questions. It's good to see
Yep,
you guys.
sounds good. Yep, take care,
Peace
guys.
out.
Yep,
Stay well.
take care.
Keep
Thanks, John.
on rocking. Let's go, guys.
Take care.